Well, hello everybody. It's Friday, November the 7th, and this is your full market report actually for Squamish for the month of October. Now, the most interesting thing about October is that we're heading into the fall and winter market and things tend to slow down. And to be honest, while I will go over some numbers with you that you might find interesting, there's really nothing exciting happening. Prices are pretty stable, inventory is pretty stable, we're at normal levels for this time of the year. There's nothing really happening within the market that is eye-opening or something we need to really have concern over. So if we look at the housing price index, which is all of the market, you can see it's just stayed flat. The sales price, not really reflective, as I've talked before, because of the number of properties we have in Squamish. The tendency is for this to not be a good reflection of the market. You see how much it varies. Percentage of original price is interesting because the negotiations that are happening on properties right now are bringing prices down a little bit. So we haven't reached that height of 99% for a while. We've been stuck below 99% of asking price is what properties are selling for. That is indicative of a balanced market the way we're sitting right now. If it drops below 96, that's when you get into a strong buyer's market. So we'll just keep an eye on that and see how things are going. The other ones that are interesting is total inventory dropping for the fall. That's totally normal. Looking at the new listings coming on, that is dropping, which is totally normal. And sales fairly flat over the last few months. So that's all pretty normal. The big one we have here, as we've always talked before, is a sales to active ratio, which is right now, it seems to be creating, we would call it in investing, a wedge-shaped pattern. You see if you drew a line from the top here across here, it'd be fairly flat because that's what 0.32, 0.31, that would be fairly flat. But on the bottom side, it's gone from 0.14 to 0.12 to 0.14 to 0.16 to 0.17, which means that line is gradually increasing as we go up. If that gets broken to the downside, then the sales to active ratio could drop, which would then indicate again a buyer's market. Or if it breaks back above the 32, that would be a strong seller's market. So we want to keep an eye on that one. But at this moment, nothing is really changing. There's 237 properties on the market as of today. That is pretty normal again for this time of year. So I'm not really too excited about what's happening. Interest rates will likely come down 0.25%. But as I put out on Facebook and Instagram, it's not really having a big impact on mortgage rates, which therefore is not really impacting people's buying power. Now, from a market segment standpoint, things are very interesting there. Apartments are getting well underbid and houses are starting to stagnate, and it's the high-end homes that are really stagnating. Now, this time of year is fairly typical for the higher-end homes to stagnate. People do tend to take them off. They want their holidays. The higher priced homes don't show as well at this time of the year, and people tend to wait until the spring flowers come out to market those homes because it's very much an eye candy type of situation. But there is another factor under the hood that people aren't considering, and that is that the banks are not considering some sources of income as much as they were. For example, foreign income is not being as heavily weighed and accepted by many banks, and as a result, people are qualifying for less. So if you think about the typical purchaser of an apartment, they're not going to be the foreign income people, but the people that are buying the $2 million, $3 million, $4 million homes, they are going to be requiring some I'm not sure how my assistant, Ira, is going to be able to pull all this together, but basically somehow my camera just shut off and it just stopped recording. Now I don't even have an image of me here, and I'm not even sure if it is recording, but let's continue on and I'll just explain what was happening with the higher end market. And so the higher end people do tend to rely on some sort of foreign either investment or some sort of foreign income, and often are in that situation. And the banks are being a little bit more restrictive on what they're accepting as income. So it is having an impact on the higher end properties. They're not moving as quickly as they have in the past. So that's just something to keep in mind. That's the only variation in the market right now. We still have houses with suites are selling amazingly well. People are still very interested in that type of home. And other than that, that's really the market in a nutshell. As we head into the winter, it's going to be a slow winter for sure. I have been busy in my business. It's been picking up quite a bit, but I think that that's just a cyclical individual realtor thing and not a market dynamic at all right now. So as the market slows in general, we're going to see slower activity over the next sort of 3 months, and it typically doesn't pick up until February. But if something should change, I'll put it out on Facebook. Make sure you do follow me on Instagram and Facebook, because I'll often let people know ahead of time when things are happening. You don't have to wait till the end of the month. And I try to give some tips and tricks that you guys will be able to utilize. So hopefully that works for you. And if you have any questions at all, let me know. Okay, take care and thanks very much. Have a wonderful day.